Okay, let's unpack this deep dive. Picture it. An American cargo ship, right? Full of soybeans, heading across the ocean. Usual stuff. Then, bam. Mid-voyage, the word comes down Genera. China's canceling all of it, just like that.
Yeah, and the sheer scale of it is what's really striking. I mean, by midday, reports showed 2.4 million tons already being shifted over to Brazil.
2.4 million, wow.
And by evening, over $1 billion, 1.1 billion to be exact, in U.S. farm contract. Just gone, vanished. 40 ships had to literally turn around.
So this wasn't just, a minor trade hiccup.
No, not at all. A multi-billion-dollar trade route was basically, severed overnight.
Right. And the sources we've looked at, they're not calling it a simple trade dispute. They're using terms like controlled demolition, even a test of resilience for the U.S. Pretty dramatic language.
It is, but when you see the fallout.
Yeah.
Bloomberg's initial take was that China canceled orders from the big players. Cargill, ADM, Bunge citing, quote, strategic purchase adjustments.
Yeah.
Very neutral phrasing.
Strategic adjustments. But then there's the timing, isn't there?
Exactly. This whole thing kicks off less than 48 hours after President Trump announces these new tariffs. $90 billion worth of Chinese goods.
So while Beijing didn't explicitly say retaliation,
Well, the proximity, it definitely makes you wonder. It raises that big question about cause and effect.
which brings us to the core of this deep dive. Was this just a short-term political punchback, China flexing its muscles over tariffs?
Or are we seeing the first moves in, like, a fundamental restructuring of how global food trade even works? That's the big question we need to tackle.
Okay, so let's start with the immediate hit here in the U.S. This controlled demolition, as some called it. It had some quick and pretty painful effects stateside, didn't it?
It really did.
Okay.
The USDA's April report, this is April 2025, it showed unsold soybean stocks jumping 13%. That's the highest they've been since, April 2019. A huge surplus suddenly appearing.
And when you got that much extra supply,
Yeah.
prices, they react predictably.
Oh, yeah. The Chicago Board of Trade saw soybean prices just plummet, down over 8% in a matter of days.
Our analysis suggests that wiped out something like $470 million in commodity value in just 1 week. That's a massive hit.
It is a devastating blow for a lot of people.
Yes.
And it's important, to remember the human side of these numbers.
Absolutely.
We found this quote from Matt Dunn. He's a fourth-generation farmer out in Des Moines. He said they felt locked out mid-season with no contingency plan, just completely blindsided.
Locked out mid-season. That really captures the shock, doesn't it? And the economic pain spread out pretty fast.
Yeah, the American Soybean Association, they estimated farmers could see an 18% income drop just for that quarter.
18%.
But maybe the most worrying thing was the sort of systemic risk. The USDA itself confirmed farmers across 11 Midwest states were facing medium to high bankruptcy risks.
Just because those forward sales contracts vanished.
Exactly. It sent this huge shockwave through the whole agricultural sector.
And it's critical, like you said, to understand this probably wasn't random. We need to look at China's side. What was their thinking here?
Precisely. You have to remember the context. Just before this soybean move, March 10th, the U.S. drops those 20% tariffs on electronics, metals, auto parts, a whole range of Chinese goods.
Right. So why hit back specifically with soybeans?
Well, looking at the sources, agriculture was, one of the few big U.S. export areas where China still had significant reliance.
Okay.
And soybeans were a huge piece of that pie. We're talking $14.3 billion in 2024 alone.
So hitting agriculture,
Yeah.
hitting the farm states, that hits a politically sensitive nerve in the U.S.
That's exactly right. Chad Bown over at the Peterson Institute, he put it bluntly. He said China was attacking Trump where it hurts most rural voters and farm states.
So not just economics, but political strategy.
Definitely. It was targeted. And as one source put it quite well, this is not about soybeans anymore. It's about strategy. This cancellation, it's really a piece in a much bigger game.
Which neatly brings us to Brazil, because they suddenly stepped in and soaked up all this demand. That wasn't just luck, was it? Sounds like they were ready.
Oh, absolutely not luck. Look, between 2020 and 2024, Brazil ramped up its soybean acreage by 21%. That's a huge expansion.
21%.
And it wasn't just farmers planting more. It was backed by massive investment, over $11.2 billion in agricultural infrastructure.
And here's the really interesting part. China was directly involved in that buildup.
Very much so. Chinese state development banks were pouring money into grain terminals down in Santos, expanding transport routes out of Mato Grosso, that's the key growing area. They even co-financed the Ferrogrão Railway. That single project cut inland transport times by something like 42%. They were building the capacity to bypass the U.S.
So China was essentially underwriting Brazil's ability to replace the U.S. as its main supplier.
That's what it looks like.
Yeah.
Bloomberg Intelligence now estimates Brazil can supply up to 70% of China's annual soybean needs.
70%?
Yeah.
That's incredible.
Yeah. And you've got other factors helping Brazil too, like fewer GMO restrictions, maybe looser environmental rules, plus more trade protection within the BRICS group.
So this really forces you, the listener, to ask, is the U.S. being pushed out? Like, permanently? Not just losing market share, but potentially sidelined in this massive global food system?
It's just a serious question.
And the timing of China's move, pulling the plug in March, April. That seems very deliberate, too.
Extremely deliberate. March to June, that's prime time for U.S. soybean exports. We're talking roughly 40% of their whole year's revenue comes in that window.
So canceling then doesn't just cut off sales.
It forces U.S. sellers into a fire sale, right when they expect peak prices, hits them on volume and value. It was a precision strike at their most vulnerable point, economically speaking.
Okay, but here's the bit that seems almost contradictory.
Yeah.
China actually paid more for the Brazilian soybeans, didn't they?
They did. Reports just somewhere between $14 and $22 extra per ton.
So if this was just about getting the cheapest beans, that makes no sense.
Yeah.
Unless
the goal wasn't immediate cost savings. There's a quote from Mei Xinyu, an analyst linked to China's Ministry of Commerce, saying it was less about soybeans and more about creating leverage.
Creating leverage. Okay, leverage for what, though? Let's talk about the official reason China gave.
Right. The official line was phytosanitary concerns, problems with fungus, pesticide residues on the U.S. shipments.
Phytosanitary concerns, which, given the timing, sounds, well, convenient.
It does seem convenient, and what's telling is the lack of actual evidence to back it up. As of April 2025, anyway. No confirmed violations flagged by the USDA, nothing showing up in the WTO complaints database.
And the U.S. soybean industry, they stick to pretty strict international standards, right?
Extremely strict. Contamination levels are typically way below official thresholds, like under 0.01%, according to FDA and GAFTA checks.
So it makes that official explanation look pretty thin.
Yeah, even seasoned analysts were raising eyebrows. Andrew Tilton at Goldman Sachs pointed out how weird it is to just halt food shipments over safety without any prior warnings or inspection delays, the usual process.
So this might be an example of using those non-tariff barriers.
Yeah.
Rules and regs used to block trade without actual tariffs.
Exactly. Citing safety concerns lets China disrupt trade, potentially sidestep WTO rules, but still send a powerful message. We can turn off the tap anytime you're not a reliable supplier.
So you're left wondering, is this genuine food safety, or is it economic warfare dressed up as regulation? A key question for you listening.
And it all circles back to those infrastructure investments China made in South America.
Right. It wasn't just about buying beans from Brazil. It was about building the highways, the ports, the rails to get those beans reliably without relying on the U.S. system.
Precisely. Over the last 5 years, China pumped something like $8.3 billion into South American transport infrastructure.
$8.3 billion.
Yeah, big stakes in ports like Itaqui in Brazil, that $1.2 billion expansion of the Northern Grain Corridor, the Ferrogrum Railway we mentioned. These aren't just business deals.
There's a clear strategic angle. Control the infrastructure, control the flow, and reduce reliance on global routes may be influenced by the U.S.
And it's working. By 2024, estimates suggest over 64% of China's soybean imports were already moving through transport networks where China had direct involvement, direct investment.
64%. Wow. There's that quote from the Carnegie Endowment analyst.
Yeah, spot on. Beijing is not just buying food, it is buying influence. They're building leverage right into the physical supply chain.
And it looks like soybeans might have just been the opening salvo. Corn could be next.
Signs point that way. We saw U.S. corn sales to China drop, 29% just in the first few months of 2025?
29%. That's significant.
And at the same time, China inks this big 3-year deal to buy corn from Brazil. Up to 9 million tons a year, worth about $2.6 billion. That's a clear move to diversify away from the U.S.
Plus, they even auctioned off U.S. corn they already had in their reserves.
Yep, 1.2 million tons. The stated reasons: price instability and strategic adjustments. You see the pattern emerging, don't you?
It definitely feels like a pattern. And the view from the industry seems to be that it's about trust, or lack thereof.
That's what Joseph Glauber, former chief economist at USDA, suggests. He says it's the tariffs. the feeling that exports could be politicized, that's eroded trust. He called it not trade friction anymore, but de-risking.
De-risking, meaning China is actively trying to insulate itself from potential U.S. policy shifts or disruptions. It's not just about price, it's about reliability and control.
Exactly. It's a fundamental recalibration.
So if corn is now being de-risked, you have to ask, what's next? Wheat, sorghum. It raises some really big, maybe unpriced questions for U.S. agriculture's future with China.
Yeah, the markets might not have fully grasped the potential scale of this shift yet.
And while U.S. officials might talk about negotiating, China's actions seem to be speaking louder, right?
Very much so. They're busy signing or updating long-term deals with Argentina, Brazil, Russia, Pakistan, locking in supplies from elsewhere. An HSBC report estimated these deals cover over 70% of their grain and oilseed needs now.
70% covered by non-U.S. deals. Meanwhile, U.S. farm exports to China
took a nosedive, down 26% in the first quarter of 2025 alone. That's a $3.2 billion drop in trade flow.
Ouch. So diplomacy might still be possible, but
the infrastructure is built, the alternative deals are signed. Jennifer Harris, formerly with the National Security Council, she argued this isn't just de-risking anymore. She called it outright decoupling.
Decoupling, that's a strong word.
It is. And with political ties strained and groups like BRICS offering China other options, you really have to ask yourself, does China even want to go back to the old trade relationship with the U.S.? Maybe the goal is decoupling.
So wrapping up this deep dive, you're really left with this huge question.
No.
Was that soybean shock just the beginning, the first spark? Or was it the main event?
It definitely felt like more than just a trade spat. It felt like a demonstration of capability, as some sources put it. China showed it could swap out a $14 billion U.S. commodity line item in, 72 hours, without causing chaos for itself. That's a powerful flex.
Yeah, it sends a serious message about their strategic independence. And it makes you think, what if they apply that same playbook elsewhere?
Exactly. What if it's semiconductors next? Or rare earth minerals, where they have dominance? Or what about U.S. treasuries?
Oof, yeah.
Suddenly, the question isn't just about soybeans or corn anymore. It potentially becomes about the future role, the stability, maybe even the dominance of the U.S. dollar itself in the global system.
Because if countries start systematically bypassing the U.S., building parallel systems, that could eventually erode demand for the dollar, couldn't it?
It's a possibility that has huge implications. This isn't just a farmer's problem in Iowa anymore. It's a question for Wall Street, for Washington, for anyone connected to the global economy, which is basically everyone listening.
So if this was just phase one,
then phase two could be much, much bigger. It's definitely something you need to keep a close eye on.
Stay ready. Because the real target, if soybeans were just the test run, might just be the U.S. dollar itself.